Hey everyone, it's November 2022 and Apple has recently released its fourth quarter results. So let's take a look at Apple's updated financial and operating results and the current valuation of this largest company in the world. First up, let's look at the current valuation of Apple relative to what it's historically traded at according to Fast Graphs. Here we're comparing the stock price, which really reflects the company's valuation, to its historical price to earnings ratio. Here we're looking at the adjusted operating earnings. We have the closing price of Apple in the black line going all the way back to 2010, along with its normal PE ratio over this time in blue, which is about 17.4 times earnings. And since Apple has a fast growth rate above 15%, another valuation measure is where the PE ratio equals the growth rate, which we see in orange, which for Apple since 2010 has been a bit higher at 18.73%. So that valuation in orange is 18.73 times earnings. We see here the COVID-19 drawdown in 2020, and since then you can see that Apple's stock price has really just exploded from under $60 per share to about 3 times higher, topping out at $180 per share. It's pulled back a bit recently and is currently around $150 per share, closing just under that on Friday. But you can see that this is still quite a bit above its historical valuation, which would really be something lower at around $110 to $120 per share based on its most recent earnings and its average historical valuation since 2010. Next, looking at what the returns of Apple have been since 2010, it's no surprise that the returns have really just been phenomenal. If you invested $10,000 into Apple and the price was just over $10 per share in 2010, with a closing price of about $150 today, your total return, including dividends, would have been over 15-fold to over $155,000, which is an over 25% compound annual growth rate. If we compare this to the S&P 500, so a broad-based index representing the largest companies and really by extension the entire US stock market, we can see that $10,000 invested at 2010 would have increased nicely about fourfold to $39,000, which is a 12% compound annual growth rate. So Apple having a really nice period of growth of over twice that of the S&P 500 over this past little over a decade. Apple had just started paying a dividend. It was less than 1 penny per share back at the start of this period. And it has rapidly grown its dividend to currently about 23 cents per quarter in the most recent share. Now, since the dividend was very small at the start of this period, there were initially, in percentage terms, some huge increases. You can see here in 2013 is over 330% dividend growth. And so these large numbers really skew the overall dividend growth rate statistics. You can see that in more recent years, the dividend growth rate has been around 6 to about 7%. And I think this is really what we should expect the dividend growth rate going forward over the next few years. Looking at the sales per share in red and earnings per share in orange, we see that Apple's had a very consistent increase in both of these over the past 20 years, going from quite low sales back in 2002 before it had released the iPod or iPhone back in 2002, sales of just 28 cents per share and no earnings, to today over $24 in sales per share and $6 in earnings per share. Like we previously saw for the dividend, since the start of this period had such low sales and no earnings, the compound annual growth rates are quite huge starting from the beginning of this period and are not really representative of what we've seen from Apple in the mature phase of this company that we've come to know over the past decade. Focusing in on just that past decade, after Apple has released the iPhone and has really been the company that we know today, we can see that the compound annual growth rate is a more reasonable 15% annually for sales and about 14.5% annually for earnings per share. Looking at dividends per share in purple and free cash flow per share in brown, we can see that the free cash flow has been increasing really nicely at about 15.5% per year over the past decade. And the dividends, which are paid from the free cash flow, has really been covered very nicely. As we'll see in a bit, they're using most of their excess cash to buy back shares, but there is a portion of capital return that's being done via these dividends, and it really looks like about 10% of the free cash flow has been paid out in the form of dividends in the most recent years. Here we're looking at the shares outstanding for Apple, and you really love to see a site like this. Share count peaked at 2012 with 26.5 billion shares outstanding, and it's been consistently buying back shares and decreasing its share count ever since then. Today it's down to 16.3 billion shares, meaning over 10 billion shares, or about 40% of the company, has been bought back over the past decade. Zooming into just the past decade, when Apple's been decreasing its share count, we see that indeed almost 5% of shares have been bought back each and every year, which is just really, really impressive. Finally, one aspect of Apple's balance sheet that did surprise me a bit is its total debt, which we see here in orange, which has actually been increasing most years over the past decade and is currently around $132.5 billion. Its total capital in purple is quite a bit higher than that at $183 billion. And since Apple is such a cash generating machine, it can easily pay back this debt, so it's nothing to worry about. But this relatively high amount of debt did surprise me a bit. Clearly, leadership thinks that it can get a great return on this low interest debt that it's been able to borrow over the past decade. And indeed, looking at the phenomenal returns, it has been able to do just that. But this relatively high, over $100 billion in debt, did stick out at me since most of its other peer companies have much lower to no debt. Just something to keep an eye on. It wouldn't surprise me if Apple starts to decrease this outstanding long-term debt since interest rates are now going up. Now let's shift to take a look at some highlights from a few of Apple's financial statements. These are from Apple's 8K, which is its quarterly report filed with the SEC for the fourth quarter of 2022. From its press release at the end of October, within this 8K, we can see that Apple posted record revenue in the quarter of over $90 billion, up 8% year over year, which is quite impressive. They also generated $24 billion in cash flow from operations and returned $29 billion to shareholders through stock buybacks and dividend payments. Apple also declared a dividend of 23 cents per share, and if you're an owner of Apple stock like I am, you received this dividend last Thursday on November 10th. Here we have Apple's balance sheet, and what I've outlined in red is essentially what we saw on the previous graph regarding its capital and debt. If you look under assets in terms of cash and marketable securities, where these marketable securities are really comprised of US Treasury bonds and commercial paper, which is short-term loans to other companies, we can see that under the current assets, which means Apple could easily access these within the next year, there's almost $50 billion in these cash and marketable securities. There's about another over $120 billion of marketable securities within its non-current assets, which means that Apple intends to hold on to these for more than a year. Their maturity date is likely more than a year out, and Apple doesn't need this cash over the next year. In terms of long-term debt, it has decreased by about $10 billion over the past year, from about $110 billion to under $100 billion currently. So it is going down, and like I said, I'd expect to continue to see this decline over time. But again, just something to note, Apple does have about $100 billion in debt, which is roughly equal to 1 year of Apple's cash flow. Next up, we have its income statement. There's really a lot of interesting information about Apple here, so I encourage you to take a look over it on your own time. Just a few things I wanted to highlight. If we look at this past year's results, so the 12 months ending here in September 2022, and compare that to the previous 12 months ending in 2021, we see that products, so physical devices like iPhones, Macs, iPads, AirPods, Apple Watches, anything like that, totaled $316 billion this past year, and it had a growth rate of over 6% year over year. Its services grew even faster at over 14%. And this is particularly impressive since services have a much higher gross margin, which we can compute just by subtracting the cost of sales from the net sales and then dividing that number by the total net sales. We can see that its gross margin for products is about 36%, which is really quite good for a physical product like a phone. That really reflects its strong brand moat. But these services have a much higher gross margin, about twice that of its products, of a gross margin of nearly 72%. So these services like iCloud, the App Store, Apple News, Apple TV, they're basically making 72 cents off of every dollar of revenue that they come in from these services. So it's great to see that this part of the business is growing quite fast at over 14% year over year. In total, their total sales increased about 8% year over year. In terms of its expenses, if we look at its operating expenses, those did increase at almost 17%, so that is faster than its sales growth. Not something that you love to see. However, this is not too crazy, and I'm sure that this is something that Apple is keeping an eye on and trying to keep in check over the next year. In total, for its operating income, that increased about 10% year over year. And finally, its net income increased just about 5% year over year. It's not the best growth, but at least it is positive, unlike a lot of its other tech companies that reported this quarter with much smaller increases in net income, or some even strongly negative, that resulted in strong share price declines. Apple was immune to that and actually saw its share price increase after these results were released. Further down on the income statement, we can see the shares outstanding. Again, Apple's bought back over 500 million shares in the past year. Love to see that. Finally, near the bottom, we see the net sales based on geography. Its largest geographic unit is in the Americas, followed by Europe and Greater China in second and third, respectively. And if we look at net sales by product category, we see that over half of its sales are done via the iPhone. iPhone sold over $200 billion over the past year. Just think about that. Over $200 billion they made from selling iPhones. Its second largest segment were that services, with over almost $80 billion in sales. And in total, in terms of growth, this was about 7% for iPhone growth and over 14% for services growth. On the final financial statement, the statement of cash flows, I just wanted to highlight the return of capital to shareholders. So from operating activities, Apple made over $122 billion over the past year. And what did it do? Well, by and large, with this excess cash, it returned it to shareholders through stock buybacks and dividends. Share buybacks were about 6 times larger than dividends, so those stock buybacks are Apple's preferred method of return of capital. It spent almost $90 billion over the past year to buy back about 5% of the company, over 500 million shares, and it paid out almost $15 billion in dividends, which gives us, as we'll later see, a relatively low, about 0.61% current dividend yield. But again, they're repurchasing back about 5% of the company per year through these repurchases of stock. So it seems that you'll be getting a relatively small amount of income from Apple, but you should be expecting to see a much larger return from Apple stock through its increase in share price as opposed to from income through dividend payments. Moving on from the SEC filing, this table is from Apple's investor relations page, and it really highlights the immense return of capital that's occurred over the past decade. Zooming into just the most recent quarters, you can see the roughly $20 to $25 billion in share buybacks that Apple has conducted, along with almost $4 billion per quarter in dividend payments. Net share settlement, just in case you're wondering, is payments for taxes of employees' equity awards. Just like how taxes are withheld from your income and paid to the IRS, Apple pays taxes on its restricted stock unit awards to employees and retires shares to do so. In total, then, it returned almost $30 billion per quarter back to shareholders each quarter this past year. And over the past decade, since 2012, it has returned what's going to be coming up on nearly $1 trillion to shareholders, You can see currently it stands at over $715 billion over the past decade. So not too long, it will indeed be over $1 trillion of capital that Apple has returned to shareholders. So if you're wondering why Apple is the most valuable company in the world, that's why. It has billions, hundreds of billions of dollars of free cash flow each year that it returns through dividends and share repurchases. On the investor relations site, there's also a page highlighting the dividend payment, which in the most recent quarters has been 23 cents per share, with the current share price of about $150 per share, and this just under $1 per year in dividend payments. We can see here from Seeking Alpha, this gives us a current dividend yield over the trailing 12 months of 0.61%. And that is lower dividend yield than its average dividend yield over the past 4 years, which has been 0.91%. And that again reflects that Apple is trading at a higher valuation than it has had historically. With a higher price, you are going to have a lower dividend yield. Finally, of course, if you're thinking of investing in Apple, you're primarily concerned about what the future holds for this company. So if we look at analyst estimates for earnings per share over the next few years, we see that the forecasted change in earnings per share is in the single digits. It's about 9% this year in 2022, and then in subsequent years it's about 3%, 8%, and 4.5%. So it's just something to keep in mind. Analysts who follow the company are expecting earnings growth to slow. Over the past decade, earnings growth has been in the 14 to 15% range, and it is expected to slow down considerably to single digits in the coming year. So it is something to keep in mind and be aware of, given that Apple is trading at a historically elevated valuation, despite there possibly being a slowing of earnings growth in the coming years. That is a possible risk you should consider when deciding whether or not that this is the right time to invest in Apple. So what does the future hold for Apple? Of course, we're all familiar with the iPhone and their other product lines. Let me know, what do you think the future holds for the iPhone and services businesses? Can Apple maintain its dominance in the smartphone market and continue to grow its high-margin services? There are also a couple of potential wildcards for long-term shareholders of Apple that could materially impact the business over the next 5 to 10 years. There are rumored augmented or virtual reality goggles, which may be coming out as soon as spring of next year. I've linked here a Twitter thread that goes into a lot of detail about the expected functionality of these goggles, what they might have. So if this is something that interests you, I definitely encourage you to take a look at this thread. And of course, the largest wildcard of all is a possible Apple Car, or as it's known internally at Apple, Project Titan. This seems to be under current development, but of course hasn't officially been confirmed, and there are no definite timelines, but it is possible that an Apple Car could be released sometime later this decade. So that's going to be it for my summary of the state of Apple's current business and its prospects as an investment. Let me know in the comments down below your thoughts on the largest company in the world. Thanks for tuning in, and please subscribe for more company reviews and investing insights.